Our 2018 forecast called for outperformance in the pound with the cable rate seen up towards 145. It hasn't even been a month and we've already nearly reached the objective. In our outlook back in December, the pound was trading at 133.50 and was setting up to close out a most impressive 2017 performance after initially averting an early 2017 retest of the post-EU referendum plus 30-year low from October 2016. We had put forward a number of reasons why we saw the pound standing out, which included a pricing out of the worst-case Brexit scenarios, recovering UK economy, pickup in UK wage growth, rising inflation, a currency due for a bounce off longer-term cycle lows, and a US administration that was subtly building its soft dollar policy campaign. All of these variables remain in play, with another possibly on the horizon in the form of sterling diversification demand in a risk-off market environment. We would highlight the reality of this prospect with the other major currencies not as inclined to be wanting to operate with stronger exchange rates, in contrast to a pound that has historically been able to manage well with a stronger currency. But all of this is happening perhaps a little too fast, and while we did say the Brexit road would be increasingly less bumpy, there will still be more bumps along the way. We also need to consider some pushback on the weakening dollar that could inspire a recovery in the buck, and we also need to consider some severely overbought technical readings on the daily chart right now. With that said, we would be on the lookout for some form of a corrective decline over the coming sessions, especially after the rate has now shot up into the next measured move target around 142, following that breakout above the 2017 high. This could mean a retracement back towards the 2017 high, now turned support around 136.60, before the cable rate looks to put in that next higher low and consider extending what has been a clear structural shift since this market bottomed out back in 2016. That's all for now.